The Indian rupee is falling, and it's falling fast. But for every loser in this economic story, there's always a winner waiting in the wings.
Think about this number, 95 rupees to the dollar. That's where analysts are predicting we could be headed, a new record low. And yeah, a number like that, it's enough to send a chill down anyone's spine.
On the surface, this sounds like a complete disaster for the economy. But here's the twist. A falling rupee isn't bad for everyone. In fact, for some, believe it or not, it's a gold mine. So, let's break down this unstoppable fall. First, we really need to understand why the rupee is weakening so quickly.
At its very core, the issue is just simple supply and demand. The value of the rupee is plummeting because the demand for one particular currency is absolutely skyrocketing, the US dollar.
So, the next question is, what's driving this huge demand? Well, it turns out there are some incredibly powerful external pressures at play.
First off, let's talk about oil. India is a massive importer, and it pays for all its crude oil in US dollars. So, it's pretty simple. When global oil prices rise, India is forced to buy more dollars just to cover the higher cost, and that just increases the demand.
Now, let's layer on some geopolitical tension. Conflicts in the Middle East can disrupt critical shipping lanes, like the Strait of Hormuz, and that tightens the global oil supply. Just the risk of that happening is enough to drive prices even higher. It really creates a perfect storm.
And then there's the flow of capital itself. In times of global uncertainty, foreign investors, well, they look for safety. They start to pull their money out of emerging markets like India, converting their rupees back into dollars and sending them overseas.
Now, India's central bank, the RBI, it can and it does intervene. It sells its own dollar reserves to try and stabilize the rupee. But you have to see it for what it is. It's like putting up a shield against a tidal wave. It can slow the fall, sure, but it can't hold back a sustained wave of high oil prices and money flowing out.
But now, here's where the story takes a really interesting turn.
So, we understand the pressures causing the rupee to fall. But maybe the most important question isn't just why it's happening, but who stands to benefit from it?
Because here's the economic reality. A falling rupee, while it's painful for some, actually creates a massive opportunity for others.
You know, in every big economic shift, there are always winners and there are always losers.
And this breaks it down perfectly. On one side, the winners. You've got the exporters. Imagine a software company that bills its clients in dollars but pays its employees in rupees. As the rupee weakens, every single dollar they earn translates into more rupees. That directly boosts their profit margins. Now, on the flip side, importers lose out. A company importing electronics has to spend more and more rupees just to buy the same amount of dollars, and that crushes their profitability.
So, which specific sectors are we talking about here? We're talking about India's export powerhouses. Information technology, which provides services all over the globe. Pharmaceuticals, a key player in generic drugs. And of course, chemicals. They all gain a huge competitive edge on the world stage. And on the losing end, well, pretty much any industry that relies heavily on imports. You've got oil marketing companies paying more for crude, airlines paying for fuel in dollars, and electronics manufacturers importing components. They all feel the squeeze.
But that's not the whole story. There's another, deeper shift that's happening just beneath the surface.
Think about the ripple effect. Step 1. Imports become more expensive. Okay, so what happens? This naturally encourages businesses to look for domestic alternatives, which is step 2. And the result of that, as you see in step 3, is a potential long-term boost for local manufacturing. It's an unexpected opportunity that comes directly from a currency crisis.
All of this leads us to one very powerful conclusion. When you look at this entire mechanism, from importers to exporters, from foreign dependence to domestic industry, you realize this isn't just about an exchange rate. It's something far more fundamental.
It is a massive transfer of wealth. Wealth is shifting from those who buy from abroad to those who sell abroad, from the consumers of foreign goods to the producers of local goods. The economy is a constantly shifting landscape. To track where the wealth is moving next, make sure you follow our channel.